Day to you again, Darren from Investor Income. We'll talk about investing with only $50, €50 or pounds, starting capital, whatever it may be. Is it worth it? Simple answer, yes. Okay, the simple answer to this is yes, it is worth it. Why would it not be worth it? You're investing in your future. That is, it opens up doors, it protects you for the future. You put something aside. Will you always gain money? No. In the long term, most definitely you will, yes. If anything, like the last 100 years, then you're going to make money. So, what is the purpose of your investing, first of all? Okay. What is the purpose? Why are you investing money? Okay. You want a brighter future, better future. So, better future, retirement. It's got a lot of people. Now, just on retirement, best future, so you want to build some money, or maybe need some cash sooner than that. Okay, I'm going to go through certain options that are available to you. At the moment, we're going to talk about, we've just got $50, €50 or whatever. What are we going to do with it? I can't spell retirement. Sorry about that. Retirement. I can't spell it. So, Jesus, what's going on here? Sorry about that. So you got your $50. What are you going to do? Well, you can do this if you just want to start off investing. Okay, you want to get a leg up in the market. You haven't got any great deal of experience with investing or starting to put a fund to one side. If you want to be making money off that 15, you want to start to build some income coming back in the shorter term. As in you need money. I'm going to be doing some videos to come, so click on the links below or see my channel, and I'll be posting very shortly some further videos on that. So what's your purpose first of all, and how you're going to build it for a retirement fund? If it's for starting a fund for retirement and a better future, more money in the bank, we can just do some simple techniques. Okay, we don't need to be rocket scientists. You can drill down into stocks as much as you want if you're going to talk about stocks. I'll just give you an example here. Okay, this is a website called Finviz. It just gives you a quick way of getting a screener here of stocks, all types of assets. So this is all stocks at the minute. This is on default. So this was if you're looking for the country's USA, I put dividend yield on here. Now, a dividend is obviously, it pays you back over time. Okay, so you'll get a quarterly payout or whatever it may be for the stock, and you'll get return off that stock, only for a small percentage. So I'm saying I want over 3% annually as a payback from that stock, holding that stock and having faith in that company. Therefore, if we're holding faith in a company, right, we want to make sure that company's not going to go out of business if possible. There's going to be a correction at some stage coming up, so we want to make sure we're not going to get caught with that. Okay, so we're going to have to look at a market capitalization, which is how much the company's total assets and everything are worth. So we're going to keep it very simple, okay? We're just going to keep it nice and simple. We're going to make sure that this market cap here, we click on here, and in there we've got some quite large companies. JP Morgan Chase, ExxonMobil, AT&T. I've just bought stock, some shares in AT&T, and they're already up quite nicely. Pfizer, Chevron, Verizon. These are all US companies. My broker is quite cheap to get. I'm not going to recommend any brokers, by the way. But anyway, these are quite large stocks, and we're looking at a price here. So let's get a price. So you've only got $50, so we're going to set under $50. So within a few minutes, we've got dividend yields of over 3%, got under $50. These American companies. Okay, so we've got AT&T, Pfizer, and we can check these out now on a free platform, any free chart platform. You can just check out where your stock lies. So I'm going to go here. We've got PFE here, which is Pfizer. I just got loaded up anyway. So you can see that stocks, it's gone up, it's down. This is the daily chart it's on. Okay, it's 1 day. Okay, each one of these bars is 1 day if you don't know that already. And here we're looking over a long period of time. Go back to 2018. So we can see we've been on a uptrend. It's pulled back a bit. It's gone down, sort of slight down channel at the minute. Price is coming down. So you could buy here and hold. It's probably going to come down if it does correct at all in the next few years. You can extend out to the weekly. Just here. Now we're looking at weeks. Okay, so massive ongoing uptrend for years. Since 2010. Let's have a look at the crash in 2008. So we came down from 2000. Okay, you can see this dotted line here. That's the price where it's at. Okay, so it's come down, it's gone back up, and it's going to be coming down most likely again for a period of time. So I personally, on that one, there's more downside risk on Pfizer, I'd say, this time. You could just hold that stock for a long period of time. If you're talking about 30 years, it's going to go through a cycle most likely and come back up again. Okay, so that is one option. If we have a look at another stock, let's have a look at the screen now. We've got AT&T. So we go to here, just put in T. This is trading view I use. It's my broker. Okay, on the daily view, this is what I bought, so this red line. Okay, and we're up here at the minute, so I've obviously gained on those stocks at the minute. And here we go on the weekly. Okay, so we extend it back out again. And I like to see this because this is a nice up, down, up, down, up, and going back up. We might go back down again and back up. Okay, but we've got years. Okay, it's gone since 1980s, 90s. See the date along the bottom here. We've got into the 2000s. We're now doing this nice up and down motion. I'm in the middle somewhere. So over time, at some stage, I'm going to gain money with this stock if I just hold it. Okay. And whichever way, it's going to at some stage come back up to this 42 mark. Okay, and I'm down at 32. So I can hold that with AT&T. We've also got a. We go down to. Yeah, I'm just going to check. Dividend yield, 5.9% dividend yield on that stock. So I'm going to, each year, I'm get 5.9% back. So if I hold this for 10, 20 years, however long it takes to come up to this 42 mark, each year I'm going to be getting 5%, hopefully, if they don't cut their dividend. But you're going to get a yield of that company. It's a large company, got a long history of paying out dividends. And here we're looking to make a profit on that stock, holding it, and we get a dividend yield over every year that we're waiting. That's coming. Okay, that to me is a pretty no-brainer, but it's just the way I trade. Okay, everyone's got different points of view. A lot of people disagree with me. This is just, I'm trying to make this as simple as possible. If you want to get started, you can get going. $50. This one's at $34.40. Okay, that's the price of the minute. So you'd still have $15 to spare. So let's go back. So you know you've bought one stock, you've got $15 to spare. Let's have a look what else you can get. Ford Motor Company. Got Energy Hewlett Packard, some big company still. Still got decent market cap. We're in the billions. We want to stay higher in the billions. So we've got Ford. I don't really like Ford as a long-term prospect, but personally, I don't know, energy transfer, oil and gas. Hewlett Packard. Okay, what have we got? I don't really like any of these. Saying that, let's have a look at. Let's go for a Ford. Let's look at Ford. Give them a chance. So look at Ford. Ford Motor Company. Here we go. So on the downward trend in a minute, you can see that's going down. Weekly. Not too bad. Not too bad. We're around without these spikes. This is about the medium around here. It's well below value probably since 1988. We're looking there. If you bring this back, it's not bad actually. It's fair value at the minute. I'd say you can buy there. You can buy there quite comfortably actually. Just with the changes in automotive industry and the leverage they've got, the amount of debt they've got. I tend to stay away from motor companies, but you could quite easily take a share in that. You had a medium value. They've been around forever and they pay out dividends. So let's look at the dividend yield. 6.2%, very good. So you could quite easily take a position in that and wait for that to come in. Okay, so there's an example. Simple way how to invest $50. I'm going to show you some other ways, some quick ways to make money. But if you just want to get into buying a stock or something, I've just given you an example of how you can buy 2 stocks, have a bit of change left from that. Both can give you a dividend. They're reasonable companies. I've done it very easy, all for free, online, using FinViz and TradingView, which I use to scan stocks, but there's loads of them out there. Just use whichever one you prefer. And I'm not affiliated to any of these. I've got no interest in them. I just use them to scan for value. Okay. So just an example what you can do. Any comments? Please like and subscribe. Help me out with building this channel. I'll be posting a lot more videos each day. So do let me know what you think. I'm just starting off. If you don't like the format, let me know if you want to see my face or something. I was going to start using my camera, but I was just going to kind of showing you the screen. So give me some feedback. Let me know what you think.